Good morning, everyone. Welcome to the Place Your Trades Network. I'm Anthony Crudele, and today my co-host is the one and only Horse. Today, the Horse is going to go over his strategy for trading CME Group's event contracts on Fed days. Happy Fed Day, everybody. Today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades. Use that link in the chat and the description in YouTube to download the Tradeovate web app for free, where you can follow along and make your own picks. The Place Your Trades Network is live Monday through Friday from 9 to 9:30. Every morning we're on here with different guests, and Sunday nights from 6 to 7. So make sure you like and subscribe to our channel, and make sure you set those notifications so you never miss one of our podcasts. Appreciate if you guys do that. It's always great to have a bunch of you tuning here on YouTube. And also, welcome everybody on Twitter. We are also streaming on Twitter. So without further ado, let me bring in my brother, the Horse. What's up, Horse?
What's up, Deli? Happy Fed Day to you and everybody out there, all the traders, everyone's favorite day to lose money.
Right? I remember in the old days when we were on the trading floor, what we used to do on the Fed days is really we'd come in, we'd maybe just take a look at the open, and then we'd go and have these long, lavish lunches, right? Then we would just wait to come back 30 minutes before, do a little bit of prep and go in there because it was always about reacting to them. That's kind of what we did. A little different these days with the electronic side of things. How do you approach a Fed day as like maybe your schedule?
Well, it's honestly pretty similar. I'm not going to lie. The market doesn't tend to do a whole lot prior to the announcement. It's usually more of a holding pattern. I still think there's good opportunities, which is what we're here to talk about in regards to the event contracts. But truthfully, the way I trade it as a day trader is very similar. I stay out of the way until around 2 o'clock. Honestly, it's still very dicey to even play when the announcement happens. Lately, the pattern we've been seeing for the last couple is a dump into the news and then a pump into the speech. I think that's obviously what everyone's looking for to repeat here again on today's. Today's is a little bit different to me, though. I think there's natural reasons why we see that move happen, at least the last couple, where folks are coming into this quite hedged, and then the natural effect of those hedges rolling off after the announcement. You see some forced buybacks from the dealers, which drives the price right back up. Today's a little bit different because the hedging doesn't seem to be quite as intense. People seem to be, at least how they're positioned, a little bit more, I guess, I don't know how to describe it. To me, I'm a little concerned about it, but they seem a little bit more risk on coming into this. We see a lot of hedging in individual equities, right, which is a bit different than the indices here. So I'm not entirely sure how this is going to play out. The good news is I think the event contracts will make this a fun play, because one thing we can expect is for the market to move. And so there's going to be pretty decent volatility. So I'm going to stick to sort of the Crudele plan and not do much this morning. Go take a long, lavish lunch, maybe squeeze in 9 holes, and then come back this afternoon. But before I do that, I'll definitely be placing some trades through the event contracts for today's volatility.
It's one of those days I really like for the event contracts because of the volatility, and I've seen Anne-Marie, Jimmy Jude, and them talk about some strangles and stuff like that. I'm not an options person, but really, as everyone maybe you don't really realize, but event contracts are just really daily options. Yes, it's a call, no, it's a put. And before we pull up your chart, Horse, I mean, this is the first time I'm talking with you on the Place Your Trades Network. Besides when you and I were on the kickoff. What are your impressions so far of event contracts?
I'm truthfully really enjoying this, exploring a new product. It's not very often that traders get to explore something brand new to the market like this and try to really figure out, how does it work? What's the best strategies for this? So for me, I'm enjoying it. It's been a learning process. I'm not going to claim to be an expert at this point, but one of the things that I've really found success with so far is playing the tails. So playing the extremes, because we're in a very high volatility environment right now. The VIX has been elevated. I think that works really well for playing the tails. By that, I mean sort of way out of the money, so to speak. In event contract terms, we would talk about the strikes farthest away from current price. To me, that has been what I've seen so far to be the best strategy for my trading, and not holding to expiration, to be honest with you, right? These are 24-hour bets, or 24-hour trades, so to speak. And to me, my best strategy has been playing the tails and selling for a profit rather than waiting for settlement. I'm still experimenting and exploring how to trade these when volatility dies. So for today, we'll just talk about what's been working so far, because honestly, I don't know what that's going to look like. But today is a perfect example, I think, of playing the tails again, some of those out of the money strikes, because none of us know what the market's going to do. What we do know is that there's going to be high volatility. So you have a decent chance of a far away strike, a cheap event contract, so to speak, at least doubling in value on the move. And the hope is to be able to have one exceed the other side. Say you're buying both, something very far away on the yes and very far away on the no. I'd like to see one double to the point of, making the other trade, even if it goes to zero, I'm still profitable between the two of them. So yes, it is a form of a strangle. The thing that's different about these, or a straddle, I guess, just depends on how you look at it. The thing about these two that is unique is the lack of traditional event volatility priced into them, which I think is advantageous for traders, people that are used to trading options. There's a natural implied volatility crush after the news. And so there's a chance that you can, lose money, even though you're directionally correct with options, which is why I think they're, traditionally one of the biggest suckers bets. Not talking about the event contracts, just traditional options with events have some other factors that a lot of traders don't know how to navigate. What I like about the event contracts is we don't have to deal with that. The trade is the trade, right? We're not worried about the event volatility crush after the news comes out. There is a little bit of natural theta in these things as the day progresses. The prices change, obviously, as you get closer to the end of the trading day. And that's natural and to be expected, but you don't have to deal with the IV aspect of traditional options. So I think there's a lot of advantages to using these over traditional options for events like this.
Oh, I agree with that. And let's pull up the charts here, and I want to talk about a couple things. Obviously, you're going to go over your strategy, but one of the things that you mentioned in the beginning was you felt that this Fed meeting was a little bit different. You felt that the way that the positioning was coming in. Maybe just quickly touch base on how you recognize that versus what you've seen in the past.
Well, something we've been talking about quite a bit over at Trader Aid, Mayhem and Aisha and I, is just noticing that the fear isn't there heading into this in terms of how some of the larger players are positioned with options coming into this FOMC compared to the others. It doesn't mean that folks aren't hedged. It just means comparatively, the market seems to be not quite as well hedged as it's been in the past. And you can see that through a lot of different readings of fear. It just depends on what you look at. And looking at the options activities, you don't see as much of it skewed down to the put side, which is really interesting. And I don't know what that's going to mean for today. But in the past, it's been relatively reliable, seeing that the volatility is high, the VIX is up, the market's well hedged. They come into the news. Some of those hedges naturally come out after the news is known. They're come off, I should say. And you see that reflexive buying from the dealers that often causes that instant rebid on FOMC, where the market dumps and then it just rallies right back to where it was. There's a reason for that. And it's typically because of the well hedged market through options. And today we don't quite see that as much in the indices. We see it in individual names. People are hammering puts on individual equities compared to what they've done in the past, where that's mostly been expressed in the indices. So I do think there's a chance for today to be a little bit different. If you're a betting man, the odds are by far to play for the market to dump on the FOMC numbers release, the actual news drop, and then rally when it comes to Powell's speech. That's been the play so far. And I think I personally, I wouldn't bet against that as of right now. I think there's a good reason why that will continue. However, it is a bit different. So there's a chance we see sort of the opposite today, which I think is very interesting. And it's one of the main reasons why I'm going to be staying away from trading this except for the event contracts, because I don't really know, and when in doubt, flatten out tends to be my mantra when it comes to trading. I don't want to get hurt, because today's move, there could be a very, very large move after the announcement in either direction. So I'd rather capture that with limited risk through the event contracts than being out there trading futures. That's just my particular take on this, because people can get really hurt trading futures on a day like this if you're not directionally correct. Sometimes you can't even get out. I mean, this thing is going to move violently after
Yeah,
the news comes out.
that's really the only thing that we do know. Things I want to touch on. Audience out there, I see you guys tuning in. I see a bunch of you guys, a lot more of you than likes. Please hit that like. That helps generate getting more people in here. And I also put a poll into the YouTube chat. Will we close higher or lower today after the FOMC meeting? I should have been more specific. It's the S&P. So far, it's 70% say yes, 30% say no. I'd love for you guys to vote in there, and Horse and I can talk about that throughout the conversation today. Horse, take it over. Let's talk a little bit about what you're seeing in the charts here.
Yeah, so this particular chart is just showing the 30-minute opening range on the S&P futures. And this is sort of getting back to how I've been trading these normally on non-Fed days, but I think it applies today. So that box that you're seeing, it's sort of a gray box on my chart with a, blue line at the top, pink line at the bottom. That's the full range of the first 30 minutes of trading. This is something I use every single day. But I found it particularly helpful with trading the event contracts in playing the tails or playing the extremes, because what I'm looking for in those first 30 minutes of trading is basically a gauge of the day's volatility. One of the ways that I sense that is how wide those first 30 minutes of trading are. So for me, anything, in that 40-point range or more, which has been pretty common lately, given the volatility we've seen, that usually sets up for a pretty ripe day to play the tails. Because what that's telling me is this is likely a market that's going to move. If that opening range is quite volatile, say 40 points or more. If it's less than, say 25 points, it's probably going to be a pretty muted day, right? And you can sort of see that over here. We have a narrow opening range and you have a narrow trading range that precedes the rest of the trading day. That's not really a good atmosphere for playing the tails. I'm going to lose on both sides. I'm going to lose on those out of the money yeses I took and those out of the money nos I took. So I've been kind of using this first 30 minutes to say, all right, we have high volatility to start the session. There's a good chance that the tails will pay today. So in an instance like this, I'm waiting to see what the first 30 minutes of trading brings, and then I'm opening my Tradeovate app to look at the tails, so to speak, that are, I guess I would say, within reason. So on a normal day like this, and another 50 points would be within reason. I think FOMC day, you could probably bump that up to 100, maybe plus or minus in either direction on the S&P 500. So if we're looking at the strikes, right now, ES, the closest strike to us, I think, is going to be what? We're roughly around 38.50 right now. Yeah, we're
right
trading
now,
at 38.60. So if you open up the strike list on an FOMC day, the opening range doesn't matter as much because we know the market is going to move, right? So I would be looking for me at like the 39.50 seem attractive. The yes there for 275. And then looking down below the chain, the 37.50s look attractive to me at the $1.75, right? So a total bet I would be invested, or total trade cost on this would be like what, $4.50.
Yeah.
So what I would be looking for is the move to be greater than my total investment, obviously, right? If one of them is held to settlement, it's going to pay out $20. So I'm going to win, even though that one side lost. Now, the advantage to these things, as you very well know, is you don't have to hold till settlement. The other advantage is what I've noticed lately is even the losing side doesn't tend to go to zero, right? So you can still, if the move is there, say you took the yeses, right, for 275 here, and the market goes bananas on the FOMC announcement, those things jump up to $10. I might sell those, take my profits from that 275 invested, but also sell the no's because they won't likely be at zero. It's not going to be a total loss. Those things are probably going to drop down to 75 cents to $1. So I can close the whole position for a profit without having to wait till settlement. That's sort of the way that I would approach this. On a normal day, I'd look at that opening range and say, okay, if we have a pretty high volatility, I might not play the tails that quite extreme. I might go for, say, like the 39.25s here and, like the 3800s. That's how I've been playing these in terms of when I say tails. I'm not looking at the absolute extremes. Those 25-cent bets on either end, pretty unlikely to pay out statistically, right? It's just the way that this works. However, you could still double up or more on those. I just don't typically go for the most extreme strikes. We're looking at a move within reason. In a normal trading day, a 40+ point opening range, it wouldn't be unusual to see another 40 points tacked on to one side. You can see that in the charts here, right? You have the pretty wide opening range, and you can see that it's often doubling that is not out of the question, right? And so that's kind of what I'm looking for these. The other thing I wanted to talk about, Deli, if it's all right, is time frames for entering trades. So I've been looking right at about 10 o'clock when that opening range is established for myself has been a decent time to place my trades in the Trade of 8 app. The other thing I've been looking at is the Europe close. When the London markets close, the market lately has often been turning. That's been another profitable time to look at placing your trades. If you look in sort of that 11 to 11:30 Eastern Standard Time, if you flip back to the chart, you can see a good example from the chart we just had up. You've been seeing quite a bit of this lately, right? When Europe closes, the whole tone of the market changes. We often are seeing moves that are completely retraced, whether it's to the upside or the downside. That's been another decent window. So there's been times where I've placed my trades at 10 o'clock and I've sold those things right around Europe closing because I know we've been seeing quite a bit of change in tone after that session closes for the remainder of the day. Been the nature of the volatility regime that we're in right now. Those are the two windows I like, around 10 a.m., 11 to 11:30 a.m. Those are the two times I'm pulling up my Trade of 8 app most often because I think there's a good chance to sort of play it like two different sessions. Does that make sense?
Oh yeah, totally. And I think that's something that you said is very important about when you're putting these in. At night, the spreads are a little wider. During the day, they get a lot tighter. Obviously, it's no different
Right.
really than looking if you trade the E-mini Nasdaq at night versus trading it on the open. Of course, you've got more people, you've got more liquidity. And one of the questions from chat is from Ish is how's the liquidity in the event contracts? And you could put as much as 250 in on one order for a yes or a no. That's what they have as clipped as the max. I've done as many as 100 at
Mhm.
any one point in time, and I got filled no problem. So
Yeah, I've also done 100. I've also found, just to answer Ish's question, to me, a little bit more strategic has been putting them in clips of 20 or so. I I don't know enough about these yet to the point, like in terms of liquidity and who's watching, where I don't want to tip my hand. So I have been making my orders a bit smaller and sort of levering up in that window. I think that's worked pretty well. I don't know if I'm just being overly cautious or not, but there's a chance, like I don't want to move price, right? Like
yeah.
that's something that does concern me if I really want to make a pretty aggressive bet. Um, but look, to answer Ish's question on top of what you said, even though the liquidity is a little bit worse in the overnight, we do know that the overnights have been moving lately. It's just the nature of this market right now with volatility. So there still has been opportunities to use the event contracts in the overnight, is particularly to the upside. I mean, the pump has been strong in the Globex session. So even with slightly worse liquidity, there's still been opportunity, in my opinion, to use the event contracts and take advantage of that because we've been seeing sort of that auto bid in the market where the pajama traders are just bidding the market up while we all sleep. There's a good opportunity to take advantage of that if it's becoming predictable again. And it has been sort of the motive lately. I know last night's a bit of an exception coming into FOMC, but there is something to say for that I wouldn't, just because we're talking about strategies to trade these after the bell rings, I wouldn't rule out the overnight either.
Yeah. No, that's great stuff and information there, Horse. A couple things I want to go over, everybody, just so you know when you're looking at the app. Like I said, that app, to get the app, the Trade of 8 app, the link is down below in the description. It'll also be in the chat. Horse has also got one in his tweet. So don't tell us you can't find the link. There's many of them out there, and it takes you actually, some of them might take you directly to place your trades. You pop your email in, it'll take you to get the app. All you do is there's the email, boom, and it'll take you and it should redirect you automatically to it. And then you click right here on this button to go and get the app. You can go get the app and start following along with them for free. Then, of course, if you want to trade them, you got to follow up and fill out your account paperwork. But a couple things I want to talk about with the app is so you can see your position up here. So I bought 15 at 450 for 39 and a quarter. My strategy is similar to what Horses is for today. I like the prior days, around those highs, recent highs and lows. So I like those strikes. I bought 15 there, and I'll probably continue to buy them if it starts to get cheaper in price, and I'll average into them. And so I'm looking at something very similar, but going back to even liquidity, I bought 15, and maybe I'm tipping my hand the wrong way, Horse. They're like, this guy stinks lately. Yesterday was up big, and already they dropped right after I bought them before I came on. But I think just going back to the strategy for today, I mean, let's just kind of summarize it for everybody, as we only got about 10 minutes to the bell, and let's go back to the chart. And Horse, just basically, let's just give everybody that quick summary of what you're looking at going into today to trade these event contracts on a Fed day.
Yep. On a normal day, it's reasonable to take the opening range total and double it. If it's over 40 points, that's a pretty reasonably expected move, right? So you got about a 40-minute or 40-point opening range, and you can see we closed about double
The
that.
opening range is 30 minutes for you, right?
For me, it's the first 30 minutes. I know everyone uses different time frames. I found 30 to be the most reliable for my trading on ES for the S&P 500. If you're into trading the NASDAQ, I think smaller time frames work better. 5-minute, even some folks trade the 5-second. For the ES, I am interested in 30 minutes. So in a normal non-Fed day, doubling the opening range when it's greater than 40 minutes is reasonable. So you'd look in your contract app for strikes that sort of coincide with these. I would say on FOMC days like today, I'm not concerned with what the opening range is. I think 100-point move is reasonable in both directions. So I sort of expand on FOMC days. And remember, these are event contracts. They are made for days like today. I'm sort of expanding what I would consider a reasonably expected move coming into FOMC. So I'm looking a little bit more farther strikes than I normally would. Okay, so using the opening range is sort of my normal strategy. I'm looking for high volatility opens. That tells me I have a chance of playing the tails on FOMC days. Not so worried about the opening range. I'm looking for plus or minus 75, 100 points from wherever we're trading right now. The key is, though, for me, you've got to take your profits and get out, because we've seen these moves, especially the last couple FOMCs, they get retraced, right? So you might be directionally correct playing the tails. If you triple, quadruple your profits on one side of those tails, cash the position out, or maybe consider cashing out and taking the other direction if we get beaten down extreme. But that's where I think where people will get in trouble is they don't take profits, right? And you can hold a settlement if you're way in the money. I get that, but on FOMC day, retracement has been the name of the game for the last couple at least. I personally would not be risking holding all the way to settlement here. I know it's advantageous because of the fees. However, we've seen the retracement happen the last couple times, and it's very likely. So if you're correct on your trade, I'd suggest paying yourself.
Yeah, I mean, I think we'll talk about that just before we go. So looking back at what Horse is talking about, so basically, let's just call 38.50 is that at the money strike. Once again, yes is a call, no is a put in an event contract for the day. It's all based on the settlement price. So one thing that I do like about these, and I think it's just an important point to make, is that if you pick yes above 38.50, right? Just to use this as a simple example, all it has to do is close one tick above it. I think that's also something psychologically that's different for people that maybe are trading SPY options or options on futures, where you're looking at it and going, oh, if I bought the at the money today, yeah, it got busy, but then we close at the same price. Basically, most of the time, you're probably going to be down money, right? But if for an event contract, all it has to do is close one tick above that price. And they could, so I think that's an important also element to think about here. And just going back to what Horse is talking about is as you slide across in the bottom here, basically 100 points. That's why he said that 37.50. And so right now that no is at $1.75.
Yeah, you could also click that strike list button. I like that view because it makes it a little bit more vertical on my screen. I can sort of scroll up and down and see that expected point move that I'm looking for. I think on an FOMC day, plus or minus 100 points is not out of the question.
No doubt. I'm actually going to put 10 to buy in here just to show at $1 because maybe I get them, and it shows your potential profits $190. So we'll end above once it's 37.50. I'm going to place that for you there.
We call those stink bids, Deli. Deli's putting in stink bids, hoping to get filled. But you know what? It's a decent strategy.
You get them, man. You get them on Fed days. That's what I like about them.
Absolutely. It's a great strategy.
And and then going back to what he said, up top will be the 39.50 right? And you look at it and go, so let's slide. Actually, let's just go with the horse set, 39.50. You click there, and it says the yes is $3, right? And we can click here. Already got some 39.25s, and I'm playing a little bit tighter there. And one thing you could put, like I said, the limit order in, and so I'll go in for $2 here. This one I don't think is a stink bid. I think this one, if we go down earlier, we might be able to get that, and I will try to buy 10 there. So basically, I'll be in at $10 and $20, but the potential profit's pretty good on both of those. And so that's what we're looking at. So horse.
Right.
I appreciate it, man. We'll follow along the rest of the day throughout Twitter to see what's going on with you. I want to remind everybody, actually, let me pull this back in here and show you something on Place Your Trades. A couple things. 11 o'clock today, I'm going to be on Spaces with Jimmy Jude, Wall Street Silver. Shy Girl hosts a Spaces every Wednesday at 11 on the Place Your Trades Twitter page, so you can go and check that out. And I also want to go over our morning poll. Every morning we're putting a poll out. If you follow us on Twitter there, you can check that out. Look at, will the S&P close above 39.75 today? Yes or no? It's 50-50 at this point.
Oh, they're split. The audience is split.
I like that.
Wow.
Yesterday,
Yeah.
everybody was bullish, and we tanked on the open. I was long too. So maybe today, maybe we close unched on the day. Who knows?
No idea, but we can expect some serious volatility and expect to have a lot of fun. And I think if you're interested in exposure on an FOMC day, to me, this is probably one of the best products to do that, limiting your risk, not getting absolutely destroyed, holding, traditional option position or trading the futures, which is my bread and butter. That's what I do. I still shy away on Fed days because it's all about capital preservation in the long run. And I think there's more smarter ways to get exposure to the moves today without, really having to put yourself at serious risk. So I appreciate you having me on to chat about these. It's been a lot of fun. Looking forward to learning new strategies from everybody else on how they're trading these event contracts as time goes on.
Yeah, no, Horse, it was really a great day to have you on. I really learned a lot about even another additional way to trade these event contracts. And I want to let everybody else know, if you want to dig a little bit deeper into the trenches, into the day trading stuff, he does a great job. Him, Aisha, Markets and Mayhem at TraderAid. Those links are in his Twitter profile, which is in the description. And of course, follow us on Twitter. If you enjoyed today's show, like and subscribe. Hit those notifications so you never miss an episode of the Place Your Trades podcast. We're on Monday through Friday from 9 to 9:30. We're here every morning. We're putting trades on live. We're all trading these event contracts here at Place Your Trades. So we're not just talking about them, we're actually doing it. And Horse is one of my favorite people in the network because we always have so much fun. And I look forward to the next time you and I are on together, my friend.
Thanks, Deli. Appreciate being here. I hope everybody has a great trading day. Stay safe and have fun with it.
And maybe some people have a long, lavishing lunch, like I talked about in the old. Don't have too many cocktails during lunch like we used to do, different times. But all right, peace. I'll see you. Have a good day.